What's up, everyone? Excited to give you this video today about Sound AI. So this company, it had rejected resistance around $4.50 today, and I will dive into the chart and give my price prediction on the stock. We called this stock out at $3, and that was about 3 weeks ago, and we are a lot higher right now. And I will play you a quick clip from my video 3 weeks ago for your confirmation. As it stands right now, I think the stock is likely on the move to $4 over the next couple weeks. So that was 25% ago. Obviously, in my opinion, I think it might be advantageous for you to click that subscribe button. But with that being said, I will jump into what I have for you today. So I'll go over the chart. I'll give a price prediction for the stock. I will go into Sound AI's Google Trends, and then I will jump into short interests. I will go into some company news, and then I will jump into the fundamentals quickly for the stock. So with that being said, let's jump into the video. So as you can see, this resistance level at $4.50 is where shares had topped out in February on the 23rd. So this level seems to be a pretty firm level of resistance for the stock. Also, this is where shares had topped out in July of 2022. Therefore, I believe this level likely holds, especially given shares are overbought right now. So the last time shares were overbought was here on the 23rd, and we moved lower over the coming weeks. The second to last time the shares were overbought was back in early February, where shares moved lower over the coming days. So the last two times shares were overbought, we saw moves lower. And what are we right now for RSI? We're overbought again, and we're coming up to a major resistance level. So therefore, I don't believe that this move above the $4 resistance level, which is where shares had found some selling pressure back in February. I don't think this holds, and also we didn't get a huge spike in volume either when we broke through this resistance level, which usually tells you that the move will likely not last. So not getting any joy in delivering that news to you. That's just my opinion. Obviously, this is not financial advice. Do your own research in D&D. But from where I sit, it seems as if this $4 resistance level will likely be a point in which shares move lower. And I'm a big fan of the stock. I own shares. So I'm not very happy about this and calling this out, but I do think we likely move back down to the moving averages around $3, which is where shares had bottomed in June. So we got this larger move higher after the whole AI news, and then we bounced off of these daily moving averages and continued higher. I think that would be a very healthy move for the stock, right? You never want to see a stock go up 1,000,000% in 2 weeks, 3 weeks, because it's just not healthy. What's the most healthy thing for the stock right now would be to come down to these moving averages, let the overbought conditions subside, and then continue higher. I think that would be really. I know if you're in short term positions, obviously you want to get in and out for 1,000,000% gain, but if you're a long-term holder here, I think you should honestly be rooting for a pullback, because it will allow more bulls to get in, and it will basically just allow for a healthier chart for this outperforming stock. So with that being said, that's my official prediction. We come back down to about $3, and then we continue higher to test this $4.50 resistance level once again. Maybe we break it, maybe we don't. I'm not a fortune teller, but my gut tells me that we likely break it. And I like this stock fundamentally, and I'll jump into my bullish thesis for that in a second here. But first off, whenever we're looking at a highly traded retail stock, we need to be looking at what people are searching, what people are Googling, how often they are Googling this stock. So this term, obviously the ticker here, then stock, topped out in terms of search volume earlier this year And now we're just trading at 61, excuse me, we're just at 61% of that peak volume. So search volume, retail chatter, that could all really see a resurgence here, which would obviously be a bullish catalyst for the stock. So my point in bringing this up is basically saying that we have more we have more room to run in terms of retail chatter, retail excitement, which obviously pushes smaller cap stocks like this one higher. So still more to be more upside to be had in terms of search trends and retail chatter. And then when we look at short interest, one thing that I thought was interesting was we saw a decrease in shorts by about 10% over the last short interest period, which was about, I think, about a week ago. So good to see that there, that the shorts are being forced out. That's good. Still a high short interest, though. Almost 10% of the stock's float is sold short. So there could still be, somewhat of a short squeeze over the coming weeks. But I wouldn't put this stock at high likelihood for a major short squeeze just because days to cover is 1.1. And for those that don't know, days to cover simply means that it takes 1.1 average daily volume to cover all shorts. So not huge there. It wouldn't cause a major move, a major quick move in the stock if all the shorts covered right away, but obviously it would be a bullish thing. And, over 10% float being shorted is nothing to sneeze at either. So decent short interest, but I wouldn't say it's at a high likelihood for a short squeeze. And then when we look more fundamentally at the company, so I wanted to highlight this recent article, which actually came out just yesterday by Joffrey Seltzer. Shout out to the Game of Thrones fans with the Joffrey. But I'll read a couple good quotes from this. So just for those that don't know, SOUN has a voice AI platform that helps with human computer interactions by allowing people to have more conversational, natural interactions when dealing with things like voice-enabled third-party assistants. Its speech-to-meaning technology combines automatic speech recognition with natural language understanding to convert speech into meaning in real time. The platform's deep meaning understanding technology also allows its platform to understand complex questions. So, if you're watching this video, you likely already know what the stock's about. If you don't, there you go. That's why it's called SoundHound AI, is because it basically just helps out with human to AI interaction. So pretty cool stuff. But let's get into a couple more important notes. So SOUN saw its revenue jump 56% to 6.7 million in Q1. However, that's off of a very low base and was just in line with expectations. So don't be misled by this number here. Now, undoubtedly there is some seasonality in these numbers, but for a company that should be at the early stages of growth, the 1% sequential bookings growth and deceleration of other growth trends are a bit concerning. In addition, its revenue forecasts continue to come down. For next quarter, analyst expectations are down 50%. So as you can see through this chart right here, analyst expectations have come down drastically, which should obviously hurt shares, but at the same time, it does allow the company, the ability to outperform these expectations given they are so low. So it really depends on how you look at it. Obviously, these numbers should be baked into the stock, assuming people know about it. It's such a highly retail traded name that many uninformed investors may be, kind of overlooking some of these stats, which is also why I wanted to put a video out about this stock. So they also added a Turkish EV maker to their portfolio of companies and customers, bringing its total up to 10 auto brands. So 10 different auto brands use SoundHound AI's AI technology to communicate with its system. So very good to see that there. And they're also huge in the POS restaurant system as well. So in terms of valuation, this is pretty important. So Sound is projected to grow revenue 45% to 44 million. On that basis, the stock trades at a price to sales multiple of 16 times. So it's pretty notable that the growth projections have come down a lot from for next year, but that hasn't led to the stock moving lower. In fact, shares have moved much higher, and they're actually outperforming peers. So we're outperforming C3AI. We're outperforming these two smaller cap names here. But in terms of valuation, we're actually way more expensive. So it's really not the best thing to see here, that valuation is much more expensive than these two peers. And we also are trading near AI in terms of valuation, but the stock price has outperformed all these stocks. So obviously outperformance, after you've experienced it, with shares, it obviously is nice to experience in the moment, but it could also lead to underperformance, let's say, if the sector trend flips. So be wary of that. Be cautious. Take profits. Please take profits if you've ridden this wave. Take some profits. Take your cost basis out. It's not going to kill you. No one ever went broke taking a profit. My favorite Warren Buffett quote. But with that being said, keep this chart in mind. It's not irrelevant. It's not the end all be all, but keep it in mind. So with that being said, I will jump into some numbers here. So not much to go off of. Obviously, price to sales way above the sector median. So not much to go off of there. And then revenue growth year over year looks great, obviously. So that is 54% growth. And anytime you have a stock that isn't profitable, you always want to see high growth numbers to rationalize that valuation, right? So the high growth number of 54% year over year looks great, but obviously, as we just talked about, it's not listed here, but the growth expectations for the stock have come down a lot. So be cautious of that there. And then in terms of gross profit margin, this looks very, very nice. So their gross profit margin of 70% is well above the sector median at 49%. So for those that don't know, basically gross profit margin tells you how much you're making when you're selling products. So, but it doesn't encapsulate the full cost of selling products like, patent technology, other things as well. But just to give an example, for this 70% gross profit margin, let's say I own a lemonade stand and I am charging $1. Let's say I'm charging $1 for lemonade, but it only costs me 30 cents to make the lemonade. When you factor in the cost of goods sold and paying the person who's handing out the lemonade, which would be included in cost of goods sold, I'm selling it for 70 cents. I'm making 70 cents each lemonade cup I sell. That would be a gross profit margin of 70%. And that doesn't encapsulate taxes, property, other things as well. So it doesn't encapsulate everything that goes in to running a business, although it tells you how much you're making when you're selling the product. It's basically simply revenue minus cost of goods sold. So 70 looks great, but we need more growth for this profit margin to really start to make us some money in the stock and have the company turn profitable. So we need to turn this gross profit margin into profits through increases in growth, which we should be seeing hopefully soon, although obviously expectations have dropped. And like I said, expectations have been brought down by covering analysts. So there's been two revenue drops over the past 3 months from analysts, and then one EPS downgrade over the past 3 months, and there isn't a single analyst out there that is bringing their EPS and revenue expectations up for the stock. So it seems as if Wall Street is becoming more and more bearish on shares. But with that being said, I hope you enjoyed the video. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.